Hi guys, welcome back to Father and Son Investing. I did not anticipate making another Treasury bill video this week. However, I also did not anticipate that Fitch, one of the major U.S. credit ratings bureaus, would downgrade the U.S. government on their credit rating. That has had a little bit of a ripple effect in terms of what people are expecting for Treasury bills, or at least questions about what they should expect for Treasury bills. So in today's video, we're going to talk just briefly about what that credit rating system is and the three companies who do it. Then we're going to talk about what this downgrade means for your current Treasury bills. And lastly, we'll talk about what the future might look like for Treasury bills following this downgrade. So let's get to it. First of all, let's just talk about the credit rating system when it comes to bonds in the United States. There are three major companies who do this: Moody's, S&P, and Fitch. Now, S&P made news back in 2011 when they were the first of these three credit bureaus to downgrade the U.S. government's credit worthiness from their highest AAA to their next highest AA+. On August 1st this week, Fitch then became the second of these three major ratings bureaus to downgrade the U.S. government also from AAA to AA+. What you see before you here is the full extent of these rating systems by the three companies. They're all similar, but there are some minor differences in the way that they label them. However, what you need to know about this is anything that goes below the BBB minus, or for Moody's, the Baa3, is not considered investment grade. So the fact that the United States went from AAA to AA+ really is not that big of a deal when it comes to credit worthiness. You're looking at going from extremely strong capacity to very strong capacity to meet your financial commitments. However, it is a little bit of a black eye for the United States. Now, what would make probably a bigger difference would be if Moody's would follow suit and also downgrade the U.S. credit worthiness. So that remains to be seen. So this is what the credit rating looks like from the U.S. from the three credit agencies. Again, back in 2011, S&P changed theirs to AA+ and has left it that way ever since. Fitch then became the next one here in 2023. Actually, earlier back in May, when there was all of this dispute going on about the debt limit, Fitch actually put them on a watch for possible downgrade, and then they've gone ahead and completed that downgrade. And then here you see Moody's. Moody's had some negative outlook back in 2011 and 2012, but otherwise has just kept the U.S. at their AAA stable outlook. Let's go ahead and get a look then and see what that Fitch downgrade did for your Treasury bills. I'm not talking about Treasury bonds here. That's going to be a different story. But for Treasury bills, let's see what has happened. We're going to look at the 4-week Treasury bill. We're going to look at the coupon equivalent. This is coming from the USTreasury.gov website. And you'll see that this coupon equivalent really has not changed. In fact, on August 3rd, 5.39, and the day the announcement came out, 5.39. It took a dip one day later, but came right back up. And if we look at all the rest of these, we're going to see something similar where they're pretty much the same. So what has this Fitch downgrade done for your Treasury bills, the current ones that you own? Really, it has done nothing. The value of them has not changed. Now, let's talk about what this Fitch downgrade should do or might do for your Treasury bills in the future. First, we'll talk about this from a theoretical standpoint. Theoretically, if a company has a downgrade in their credit worthiness, then the yield on their bonds should go up. Why is that? Because investors are taking a little bit more risk in order to lend that company or entity money. Now, with the U.S. government, really, it's probably a bit different because the government has not defaulted on their loans. In fact, there are investment opportunities out there when it comes to bonds that will only invest in AAA. Well, back in 2011, when S&P downgraded the U.S. government, all those places did was rewrite their rules to say AAA or U.S. government guaranteed. Therefore, this downgrade, although theoretically it should increase your yield just a little bit on your U.S. government treasuries, in fact, the likelihood of that happening is not very high. What I do think it does is it keeps the floor in place so that that floor doesn't start slipping lower, because there is just a little bit of a downgrade here. However, keep in mind that when it comes to U.S. Treasuries, this is a marketplace, and any news at all can change things. In fact, if there is any inclination that a recession is actually coming, we're going to see immediately that these Treasury bills, Treasury notes, and Treasury bonds yields are going to slip just on the news. To wrap up this video, I'm just going to borrow some words here from Warren Buffett. I actually did a video about Warren Buffett and his Treasury bill habit. If you haven't seen that, I encourage you to go back and watch it. But let's just borrow what Warren Buffett had to say. The headline here out of Barron's: Warren Buffett isn't worried about Fitch downgrade. What is it that he told CNBC? This is what Warren Buffett told CNBC's Becky Quick. There are some things that people shouldn't worry about, and this is one. He went on to say the dollar is the reserve currency of the world, and everyone knows it. He said, we bought $10 billion in U.S. Treasuries last Monday, and we bought $10 billion in this Monday. He went on to say the only question for next Monday is whether we will buy $10 billion of 3-month or 6-month Treasury bills. And he actually does that every week. I think the news about this Fitch downgrade is going to pass quickly. In fact, it may be passing quickly already. There are other people echoing Warren Buffett's sentiments. Bill Ackman came out and said buying Treasury bills is what he does for his short-term cash holdings. And even Elon Musk yesterday came out and said Treasury bills are a no-brainer. If this information was helpful for you, please give us a thumbs up, and we'd love to have you subscribe. As always, share this kind of information with a young person in your life. Treasury bills are a great way for them to get started on their investment journey. Until next time, enjoy your investing.